Morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, June 11th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. And so with that in mind, let's take a look at some of the economic announcements that took place this last week. The data that came out hardly had any sway, and basically very little effect on the market participants. Releases featured a slightly narrowing trade deficit of about $50 billion, along with an inline 0.6 of an increase in wholesale inventories. During the week, the euro endured selling for the entire session on Friday and ended the day about 0.5% lower to $1.25. In contrast to recent weeks, however, action among stocks was less correlated to euro's movements this week, and so the market responded on its own off of a technical bounce as we were quite oversold, and the market finally gave us that bounce that we were looking for. As far as the current week, reports suggest that Europe leaders will convene during this past weekend to address Spain's struggling banking system. The weekend also should bring us some price data from China, so that will be some of the breaking news that we'll see Monday morning. As far as last week, as we take a look, there was very little that had to take place on Monday, Tuesday, or Wednesday, but we did see on Thursday jobless claims, which came out before the market opened. No big surprise, no great disappointment, very little effect on the overall market. What we actually saw in the market last week was one of a technical bounce. Nothing much happened on Friday as we got through the week, not being moved by the data that was coming out of these announcements. But now let's take a look at this week and see exactly what we're looking at this week, as we see very little on Monday. We got same-store sales on Tuesday before the market opens, import and export prices before the market opens, and those can move the market. We got PPI on Wednesday along with retail sales and business inventories. Certainly we can see some movement from some of that data that could come out. And then, of course, on Thursday, we have a bigger day when we see the CPI come out. Jobless claims come out at 8:30. Both of those coming out before the market opens, and both have been known to move the market before. On Friday, which is quadruple witching day as we enter into the market and options expiration week, we see that we've got the Empire State Manufacturing numbers coming out at 8:30. And then we see that as we work through till the 10 o'clock time at 9:55, we got consumer sentiment. And consumer sentiment certainly has been one of those things that can move the market. So there is some announcement, some data coming out this week that could have an effect. And then, of course, the ever fearful options expiration week, which certainly makes it harder for us to trade as swing traders. So with that in mind, we see that we have quite a week coming in the week that's going to come. All right, one of the things that we could talk about as we look at the data is that with the coming week, options expiration is there, and that is always a week that certainly can give us some headaches as to which way the market's going to go. Friday, the stocks fought to reclaim the gains that they surrendered in the prior session on Thursday, as we saw a pullback Thursday from a high, and as the day went on, that was this candlestick right here. As the day went on, they were unable to hold on to the gains, and we closed near the low of the day. As we look at this June option expiration week, it is one that has historically been difficult and sometimes treacherous for those bulls that are part of the market. As we see starting today, the first trading of expiration week, the Dow has been down 15 times in the last 30 years with a slight average loss. On expiration day, which is Friday, the Dow Jones has advanced 18 times over the same period, but on average, the day has been a loser, declining 0.8%. So in spite of the fact that it's even as to how many times it was up and how many times it was down on expiration day, it still ended up with a loss. So the move down were probably more emphasis than the moves that were up. On option expiration week, performance overall, that is a day with more advances than declines, but still negative. The week after has been quite disastrous. So if we look at not only this week, but take a look at next week, we see that next week the Dow has managed gains in only 2 out of the last 22 years after expiration. So, and it's been down 13 straight years in a row. So next week is a week that we can look for quite a tendency to the downside. Average loss over those 22 years was 1.2% for the week. So this week isn't exactly what we would expect to be a gang-up week historically. And then as we look at next week, it is a week that certainly percentage-wise has given us more down than up. All right, well, that gives us our historical perspective. Let's take a look at the week that just took place. Here we're looking at Monday, and as we look at Monday, we see that this low, which was a pivot point, that is, it went from going down to going up, was lower than this low. So we are still in an overall downtrend in the market. All right, but on Monday, we began the move that looked like a reversal pattern with our doji, and then we get confirmation on Tuesday morning. We talked about this last Monday, and we said watch for this buy signal and then take a look at the stocks that we watch and see if they also give you a buy signal at the same time, as those are the stocks that we expect to lead us up. And we saw that we got a buy signal on Tuesday, and it followed through on Wednesday with a strong follow through, hitting that overhead diagonal resistance point. And then on Thursday, we saw that we moved up towards that previous resistance point of 1333. Didn't quite make it. Didn't quite make 1330. But we see that when the day was all said and done, the bears won at the end of the day as we ended up with this, what one might call a gravestone. And then what we see is that we see that on Friday, we ended up with a lower high and a lower low. So we went from an up cycle in a downtrending market to the beginning of a down cycle with confirmation. Now, ultimately, the real question is, where are we going in the week that comes? All right, are we going to get a slight pullback and a bounce up to higher highs, or are we going to come back down and retest this previous low? And is this low going to be lower than this low, or is it going to be higher than this low, giving us the potential to continue on up and look and try to establish what our summer range is and get us into some kind of sideways trend? Those are my expectations, but it means absolutely nothing until we get confirmation of that. So at the moment, we are in a downtrend that looks like that. We had a bounce, which was a technical bounce, and now we've begun the down cycle again, and we'll see whether we pop up or whether we continue back down and retest that low. All right, that's the SPX, and that was the week that was, and we'll see where we're going to go as we move forward to the next week that's going to take place there. At least we have an idea of what our possibilities are. Next, let's take a look at the indexes for the week, and as we see, all of them are back in positive numbers, which last week, all of them, or not all of them, but a number of them were in negative numbers. So we see that the percent changes in the Dow, in the NASDAQ, in the S&P, and in the Russell 2000 put us back into positive numbers for the year to date, which we had lost in a couple of these indices, and had given back everything that we picked up during that very, very strong first quarter. So we see the leader in all this is the NASDAQ, which is up almost double digits, almost up 10%. And we see that the S&P is up about half that. And then the other indices are following. So these two indexes are certainly showing us some strength and a little bit of a bounce off that technical bounce that we got, which started on Monday. With that in mind, let's take a look at the Dow, see what that looks like. As we look at the chart, here's Monday right here. We see we end up with a formation that looked very much like the S&P. Notice we did get a lower high and a lower low on Friday compared to Thursday's doji day. All right, very similar chart to the S&P. Next, let's take a look at the NASDAQ, and we see that it also got its bounce with confirmation on Tuesday and gave us very much the same picture. However, if you notice that the NASDAQ was leading the market up, gapped way up, almost went up and hit that 30-day moving average, not quite, but it pulled back throughout the day, as it was the NASDAQ that pulled the market back on Thursday. Tried to regain much of that as we looked at Friday's rally by the NASDAQ. Where will Monday go? Watch that first half hour or the first hour and determine where those opening high and opening low are. Excuse me. Next, let's take a look at the Russell 2000. The weakest of all the indexes, trading well below the 200-day moving average. And we see that it too had that same pattern for the 5 days of the week, as we had a very oversold condition and got our technical bounce, our relief rally off of that pullback. So with that, we saw the Russell and we looked at our indexes. Now let's take a look at some of the exchange traded funds and take a look and use those as a mechanism to look at what some of the sectors did during the week. Before we do that, let's take a look at the VIX, and we see that we're still trading above that magic 20 number. And normally, 85% of the time, market trades between 20 and 14, and we see that we're still above it, but we are coming and approaching that area, and we'll see what's going to happen as we go into this options expiration week, which doesn't have a great history, and then the week after, which even has a worse history. If we do pull back in the market, you can expect that this VIX will start heading back up again. We'll see whether we get as high as we were basically about 7-8 days ago. VIX getting much more closer to its normal trading range. Next, let's take a look at the bonds. We're going to look at TLT, which is an exchange traded fund that tells us about the bonds. The bonds had a huge run during this pullback section that we've had going into the summer, much higher than we expected the bonds to go to, and we see that it's basically still well above the 30, 50, and 200-day moving average. The bonds certainly have been a safe haven for those that wanted to pull some money out of the market. Next, let's take a look at another sector, and we'll look at the financials, the XLF ETF, and utilize that just as a guideline to show us what the financials did. Notice very similar to what the S&P and all of the other indices look like, as we're trading in this zone for the summer, and we see that we're really trading in quite a tight zone here. If that was a straight line, you'd appreciate it even better. That looks something like this. It's not even getting back up that high again. We'll see if we'll work up that high as we establish this summer trading zone. All right, next let's take a look at the oil, and we see that oil has been trading down and continues to trade lower. Actually, if you look at the actual price of oil per barrel, it ended the day Friday at $84 a barrel, and during the week we ended up with a new 2012 low, which actually ended up beneath $82 per barrel, as oil has continued to pull back and definitely trading down from some of its previous highs as that first quarter took place. The next exchange traded fund that we're going to take a look at is gold, that safe haven, and we see that it spiked a bit above this trading range that we're in, and we see that Friday it basically closed where it closed on Thursday for a very little change, up 23 cents on the spider. And we did have highs of 1,600 per ounce, but gold finished in positive territory for the first time this week, posting a modest gain of 0.1% at $15.95.50 per ounce, as we see that gold did finally get a bit of a bounce as the market moved its way. All right, next let's take a look at the spider and look at what kind of volume we had. Here we are Monday, and here we are Friday, and notice we went into an up cycle, getting higher highs, higher lows, and there we are with the Thursday when it pulled back and closed very near the low of the day, and then almost got most of it back on Friday. But look at the volume on Friday. Not convincing that we're ready to keep going higher. As a matter of fact, that kind of volume will not give us confirmation of that. So watch carefully on Friday to see whether we start heading up or whether we start headed down. No volume on the bounce up on Friday. So that kind of gives you an idea of what the market did during the last week. And now our consideration will go to our stocks that we watch. So for those of you that are gold members, we'll continue on and look at these charts, see how they reacted to what the overall market reacted to. For those of you that are not gold members, we certainly had an interesting week in the market. Expect a very interesting week this week as we go into options expiration, which always has certain surprises for us. And so for those of you that are gold members, we'll continue on with our list of stocks to watch. For those of you that would like to see more free videos, go to www.optionsuniversity.com/free gold. And with that thought in mind, this is Butch Shorak, Options University, Monday, June 11th, 2012. Thank you very much for being here.